institutional traders don't just enter the market randomly. When they build their positions, they leave footprints behind. An interesting part is these footprints are actually visible on the chart if you know where to look. In the institutional world, most decisions are made on quarterly and yearly cycles, and that structure shows up in price more than people realize. In this video, I'm going to show you a strategy that I developed to track these moves using quarterly opening levels. After you learn this strategy, you will understand where real money is positioned. So let's start. So in this example, we are looking at a monthly chart. Each candle you see represents 1 month. For this strategy, first we need to define the quarterly opening levels. As you may know, for down candles, the opening level is above, where this body of the candle starts. And for up candle, the opening level is below. So what I realize here, this red candle is October month, which is the 4th quarterly opening level. First, I will define the opening level of this candle. So this candle is November and this is the December. So the next candle will be January, which is the 1st quarterly opening level. I will play out and see where price will open. So as you can see, price opened right here, and you can clearly see now if price comes back down to this quarterly opening level, I will expect bounce from here. Now I define 2 quarterly opening level that makes sense in the chart. Let's go down to daily chart. So this was October quarterly opening level and this was January quarterly opening level. Let's play out and see a little more. After first quarterly opening in January, price directly pushed down, and what I was expecting is price might have reaction from this quarterly opening level up until this one, because after this first quarterly opening level, price never traded above and retested this level. So if I see some reversal from this point, price will aim the first quarterly opening level, because there are still orders sitting around this quarterly opening level. Let's play out and see. As you can see, price directly aimed the first quarterly opening level. So what happened here? After this October quarterly opening, price pushed down, then it went up above this quarterly opening level. So you can think like this, institutions were positioning themselves around this level. They were obviously buying every time price made a new low. It can still continue to go down, but it didn't, and it turns its way up. When this October quarterly opening level was regained, later on you can wait price around this October quarterly opening level. As you can see, after January month started, price pushed down directly to the level where October quarterly opening level was. And this January opening level wasn't tested yet. After price pushed down, it never traded above again this opening level. So there are still orders that needs to be matched around this level. So that usually means there was real positioning happening there. Not retail, but larger players building over time. So when price comes back, it's going back to where that move originally started. And between these quarterly opening levels, you can reasonably set your target. Because I'm not believing price will take this high. I don't have unreasonable target that price will go to $120. I'm just positioning myself as institutional trader. I am trading from one quarterly opening level to another one. But you should be careful with one thing. Not all quarterly opening levels make sense. You need to first define the quarterly opening levels that make sense on the price chart. So let's go to monthly chart again. So as you can see, after October quarterly opening level, price pushed down. And the next month, what happened? Price got rejected and pushed up with this strong green candle. And 2 months later in January, price pushed down until this October quarterly opening level. Because at some point, price needs to balance this up movement. There are still buy orders where this big move happened. And our reference point is quarterly opening level. So it has some narrative that you can read in this price movement. Also, when you measure this range from low to this high, you can see the midpoint of the range where price got rejected. And there is also our quarterly opening level. So price push up, came down, rebalance at 0.5 level and this quarterly opening level, and push up until this January quarterly opening level. Let's see another example. So right now we are looking at 3 monthly time frame. So when you define quarterly opening levels, you can check 3 monthly time frame because each candle represents 3 months. So opening level of each candle is quarterly opening level. You can see this red down candle. This represents October, November and December month. And the next candle represents first quarter. So this red candle is last quarter. When this quarter started, price pushed down, and the next quarter it went up and created this engulfing green candle. So you can think like this. If price pushed down and the next quarter it regained all the level that was created previous quarter, you can think that we might have reversal. So I will define the opening level of this last quarter. And after this first quarterly candle, second quarter starts with April and it pushes price down. I will also define the opening level of this quarter. Even from here, how price is respecting this quarterly opening level. It pushed down, it regained the level and it retested this quarterly opening level and pushed up again. And afterwards, it revisited the quarterly opening level again and how it's respecting and pushes price up. Let's also define the first quarterly opening level. I will go down to monthly chart. Now you can clearly see how institutions were positioning themselves. From this quarterly opening, they pushed price down. Then it went up and regained the level that was lost previously. So you can think here that you missed the up move, but it's totally wrong because price needs to rebalance. So price will eventually come down to a level that makes sense. And that level is previous quarterly opening level, as you can see. So after this April second quarterly opening level, price pushed down directly. It didn't revisit this quarterly opening level. It just pushed down. After price rebalancing around this quarterly opening level, it pushes up again above this quarterly opening level and it goes up until this high. So we also define this January quarterly opening level here. Price slightly pushed up after this quarterly opening level. It came down. When you see price starts dropping, you can wait price to come down to this previous quarterly opening level. And it exactly happened like that. After price comes down and revisit this quarterly opening level, it pushes up until this quarterly opening level. So let's say you missed this reversal. You can wait price right around this quarterly opening level. And again, let's say you missed this up movement. You can wait price to rebalance around this quarterly opening level and set your target as January opening level, which is first quarterly opening level. So large players scale in and out and many of their decisions are based on longer term price references like these quarterly opening levels. So when price finally comes back, it can still trigger reactions because that level remains relevant in their framework. So the reaction of these levels comes from a mix of existing positions. Some participants are defending earlier entries. Some are re-entering at a known price and others are reacting to the level itself. So that combination is what creates consistent reactions around these levels. So when you start marking only the meaningful quarterly levels that provide some narrative, you are essentially filtering the chart down to areas where real positioning happened. And instead of guessing where price might react, you are focusing on levels that already proved they matter. So this is not just guesswork. When you follow these levels, you are actually following the institutional footprints. These are not 5 minutes or 15 minutes candles. These are higher time frame movements. So if some big players are positioning, they will leave a footprint on price chart. And your goal is trying to find them. And these opening levels help you find them. So make sure you also apply this to your chart and see how price is reacting. You need to understand by yourself how price is actually moving around these levels. Which one is working better and which one is providing some narrative as to what price is actually doing. If there is any institutional interest or not. If price is trying to rebalance or not. Because not all quarterly opening levels matter. Some of them are just noise. There is not some institutional interest on the price chart you are looking at. But if there is, you can definitely see institutional behavior on price chart. So I hope you enjoyed this video. Please share your thought with me in the comment section. And if you want to support me and see more teachings are coming like this one, like this video and subscribe to my channel. Good luck with your trading. See you next time.